Hi, so Charlie giving you Monday's market commentary, and I hope you're very well. We'll look at a couple of things today. We're obviously going to do the market commentary, and just a couple of things to start off with. ETX Capital, to start with, have just lowered their spreads on currencies, if you're not already aware. So they've reduced the likes of euro dollar to 1.5 pips, and cable, so that's pound dollar, to 2 pips. So and across the board, I think they've cut a number of currency pairs and cut their spread. So well worth having a look at if you're not currently looking at them. If you are already trading with them, then just so you're already aware, you may not be, then they've cut their spreads, which is always useful. And that does lead me on to what I'm about to cover next. But also the other thing is, if you've not already got an account, go to easytrader.com and look them up through us there, and it does mean that you come through our umbrella. They do look after you. There's always the occasion when a broker may stop you out and you look at it and you think that that shouldn't have happened. It just means that if you come under our umbrella, they look after you more, as opposed to if you're just on your own. If they know that you're with Easy Trader, they'll just say, okay, we'll sort you out. And so occasionally it could be like it's a news or something like that, I don't know, or some it does occasionally happen where someone may get stopped out and someone may say, oh, actually I don't really agree with that. Well, we can act on your behalf and deal with them, and if it's fair enough, then they will do that for you and sort you out. So, but overall, their execution is excellent anyway. So, well worth having a look at there. VTX. It leads me on to what I was about to cover off with you, which is in these what can be duller markets. We're now into December. And in these duller markets, so let's assume it's a bit dull this morning. I'll go into the commentary this morning and have a look at that shortly. But one thing, if you're a day trader and the markets start getting slower, and so it means the ATR intraday just gets lower. I haven't checked today's yet. I'll have to check that in a second. But if the range isn't as big, then there's no point trading off likes of a 2 minute chart or maybe even a 5 minute chart. I mean, there are obviously certain strategies when, yes, these will still work absolutely fine, but certainly if you're using them for profit targets, you may find that there's not a lot of profit in it. So one simple solution is to go out to a higher time frame charts. Go out to your 15 minutes, go out to your hourly charts, or even your 30-minute charts, and trade that way. So that's what I'm doing more as we're going into December here. I'm tending to trade off the bigger time frames and so I can just get a trade set up and just let it go, and not having to be micromanaging it like you might be on these time frames, whereby there's not a lot of pippage in it. So that's what I'm doing. So just if you're a day trader, that's a great idea to do that. Okay, let's look at, because otherwise all that happens is you're a day trader and you'll sit there moaning saying, oh, there's not a lot of pips in the move. Well, there are if you go out to your higher time frames. Right, let's go into the commentary. So I need to hit this button, I think, and then let's have a look. What have I got there? Yeah, and then hit the daily charts. Okay, so I'll start off with the FTSE, because the FTSE's an interesting market here at the moment, because it's tested these levels several times, as you can see here, once, twice, 3 times, and it's sort of coming up here again. So I'd be very, very keen to keep my eye on the FTSE for a potential breakout. Now that may take a while yet. It may not come till the new year. We could come up, test again, and then fall off again, come down to here, and then it goes. So it could happen. We've done 1, 2, 3, 4. It could happen now, or it may just take one last pullback and then go for it in the new year. So definitely keep an eye on that. Those of you that use momentum, then you can use your momentum charts to gauge that. So well worth looking at daily charts and weekly charts of momentum to get a gauge for what to do with that FTSE for the momentum guys. So I thought FTSE was interesting. Let's go to the S&P, as we're on the stock market indices at the moment. If I can find it on my watch list just off the screen here. Where have you gone? Bear with me, talk amongst yourselves whilst I find it. There it is. So the S&P, obviously not as strong as the FTSE has been in relative terms of late, but it's had a tremendous run up, but it's still below its out daily 50 MA. So we've still got to see the S&P get a close back above that and see this 50 MA flatten off and start to turn back up. But if it does, then there's any reason why not see an end of year rally taking us right away back up to these highs. So that is the potential. This bar here, this is the line in the sand, so if we break below this bar, then it's highly likely we're going to come back down for an attack and retest of the lows. However, all the time we're holding on to that, then I see that the potential is there for more strength ahead, and with some congestion in between. Did a nasty little day on Friday, little doji day there, but otherwise then a good run up to 1460 is certainly not out of the question, especially given the seasonal bias that you tend to have. So we'll keep our eye on that anyway. It's still got some work to do yet anyway, but at the moment, if it can get above that 50 and then consolidate, then we really are looking up to that 1460 to 1470 range as potential targets. Let's have a quick look at the euro dollar. So that's the euro yen, wrong one, and see if we can find the euro dollar. There it is. Euro dollar again has been quite strong, good movement. Again, here's your line in the sand with the bottom of this hammered candle. So all the time we're trading above that, then that's a positive. Obviously, with the 50-day moving average is flattened off, and it actually started to marginally move higher. So we have to consider the 130-150 zone again on the upside. And so yes, we can have a pullback at any stage, but we're close enough to want to at least challenge these highs up here from 131 sort of 25-30ish zone up here back up into the 50 zone. So very interesting. Let's actually go back out and remind ourselves about this weekly chart, because remember the weekly time frame has been hugging that weekly 50 MA, this white line, and now finally we might be getting a breakout which could actually take the euro considerably higher, actually on a weekly time frame, maybe up to retest the weekly 100. So it does have that potential to break out actually of this zone and come up here. So what I'm seeing across these markets at the moment is potential for further strength. We looked at the FTSE, the S&P, the euro. All of them have the potential for further strengths at the moment. So they certainly do look like they have that potential. Obviously, we've got the line in the sands with them as well. And so if they break those lows, then maybe it's going to be not game over, but certainly we're going to see some weakness coming back in again. But for now, looking okay. I shall leave that with you. Have a fabulous week. Kim will be back in touch on Wednesday.